Chairman Bernanke speaking in Europe this morning, as you already know. China raising its reserve ratio by 50 basis points earlier this morning. Want to get some reaction from the futures pits today. Bob Iacchino and Ben Lichtenstein together, standing by in Chicago. Guys, good morning to you both.
Good morning.
Bob, I guess, let's see, futures down. How much of this is China's move this morning?
I think the vast majority of it is China's move. And to be honest, I'm not that worried about it. China is the biggest news of the morning, obviously. The speech by Bernanke was absolutely what everybody was watching as that move was announced by you guys. You guys even cut into that 47-minute answer to announce that China had done that. So I think that's the biggest piece of news in here. But it's interesting to me because Bernanke's speech mixed into that is really kind of showing that his focus is global cooperation. That's what he's out there pushing for, to make the U.S. moves seem less in a vacuum. And some of my longer-term indicators are actually pointing towards some dollar strength, but ultra-short term, still short the dollar seems to be the way to go, especially against the euro and the yen.
Do you sense him getting any traction on that front, if he really is trying to get the world behind him, Ben?
Well, yeah, I mean, I think that we're going to see some sort of concerted effort here to make things better all around and to start to kind of get some sort of stimulus going at this point. But, you know, there's a lot of things that we've been focused on. One thing is just the complete uncertainty associated with all of this right now. There's just so much up in the air. So the markets, unfortunately, are going to kind of be a little bit jittery and kind of on pins and needles, if you will. But the other thing is that we're not seeing a reflection so much of this in the volatility index and the fear index. And that's one of the key indicators that we've been looking in terms of somewhat of a pivot right around this 1200 level in the S&Ps, and as long as we stay below 20 in that volatility index, then I think that we're going to see some continued growth and strength in the stock market here. And as Bob mentioned, yes, we are seeing some dollar strength, and that's contributing somewhat.
George, you have a question? I'm sorry.
No.
I thought you did. Okay. Here's a line from one of the op-eds, Andy Kessler's op-ed in the Journal this morning, Bob. My sense is the stock market is less likely to cooperate this time. He's referring to QE2. Since QE2 has been announced, the Dow's down 254. Bond yields have backed up, exactly the opposite of what Mr. Bernanke was trying to achieve. If the latest doesn't work, we may see real estate seek its true lower value, causing a sell-off of bank stocks that require them to begin paying more for short-term debt. Is that the overriding concern among bears right now?
Well, I mean, it sounds like Ben Bernanke wrote his speech around that op-ed, doesn't it?
Yeah.
I mean, basically, that is his concern, and that's where, you know, Ben makes a great point about the concerted global effort, because that could turn that particular sentiment around, but still just for the very ultra-short term. You know, in the short term, I talked about this last time I was on with you guys, in the short term, we were looking at the jobs number getting a little bit better. It has. We were looking at a changeover of the House. That's what the market wanted. That has happened, and we've seen the market's up 7.3% in the S&P on a price basis as of yesterday. July 23rd, I was on your show. I said I think it'll be up 9 to 11% by the end of the year. I still think that, but that means nothing toward 2011 in my mind. Again, going back to Ben's comment, because I think it's a great point, the market is not showing that fear. We're still not seeing that volume. We're still seeing a net outflow in mutual funds. But toward the end of the year, I don't see a lot of headwinds that's going to take this entire rally away.
Yeah, Ben, you agree? Last word from you?
Yeah, I do. I feel like every kind of nation sort of jockeying position right now, trying to protect their own currency. So, again, we need some sort of concerted effort. But, again, one thing I want to point out, as Bob was talking about, again, the strength in the market, we've been seeing an increase right now in open interest as we see these rallies. So these are new long positions coming into the market, not shorts getting out necessarily. So, again, the market seems very comfortable at these levels. We had a nice pullback to key levels of support, 1172 roughly in the S&Ps. That was basically that value area that we've been establishing ahead of the QE2, ahead of the election, and ahead of that unemployment data that we received a while ago. So, again, the market's found value at these levels, bounced off a bit of support. Right now we need to see this 1200 level get breached with some conviction and some energy to the upside.
Right. Well, we'll see what happens as we get into the Thanksgiving next week and the final 6 weeks of the year. Guys, appreciate that. Have a great weekend.
Thanks, you too.
Bob and Ben, we'll talk to you later.
Thank you.